Hi, this is Dan Collins coming to you live from Traders Expo, New York. Joining me is Jeanette Young, the options queen. Jeanette has traded commodity markets, equity index markets on the floor, on the screen, options on them. You've learned a lot over the years. What did you learn when you started that's kind of transferred still in your trading today?
Well, my history, I started at Thompson McKinnon Securities on the equity side of the market. Would you believe? So my first day down at the New York Board of Trade, I came in my little suit with my little high heels, and I learned very quickly that shoes are very important. And that if your feet hurt, you can't trade. Oh, by the way, and if you sat down in the ring, $250 fine.
Wow.
So I went home early that day. Next day I came in wearing slacks because the other point was if you bent over, you were in trouble. So forget about it. Those are funny things.
I worked on the floor for 10 years. I understand what you're saying.
It's a rough, tough, tumble world. And as you were talking about your Euro trader friend, I did exactly the same thing. I did not curse. I did not act any different than I normally do, and I didn't play into it because what the trading world looked like to me from the upstairs trader to the ring looked like a men's locker room where they were belching and farting and smelling, and it was really quite interesting. But I looked at this really wild group and I said, if these idiots can make money doing this, I have to be able to do this.
Okay, and what you did is you started studying the technicals because a lot of the advantage had to do with someone's proximity to paper, where you looked at the technicals. Talk about how that helped you.
Well, I actually was a technical analyst before I came onto the floor. So, I mean, for me, everything is in the chart. It tells me everything. It tells me inside information. It tells me public information. It shows me supply and demand. And I can see it, and there's certain things that work all the time. So, I mean, you know when you're going up, you're going higher, and you know if you violate a trend line, you're definitely going to go lower. And I made certain rules. Now, as a pit trader, I learned that once you break out to the high, first of all, if it's a high there, the pit's going to try to see what's above it. They want to see where those stops are resting. So if it's going to do that, I know it's going to do that. I know it's not going to last. But I also learned another important thing, that if it goes up and it stays up for a second day, you better believe it. So I used to have the 2-day rule. If it violated the trend line for 2 days, then I would take the position.
Oh.
I mean, these are just minor things, but it was so easy. It's supply and demand. Just look at the facts. Don't try to tell the market what you want it to do, because the market doesn't care.
Now, your use of technicals, now you eventually moved into options trading, in fact, writing a book and becoming the options queen. Is that because options are so precise? Did that kind of lead you into options, that you were looking at the numbers and allowed you to make
options
more precise
to
trades?
me are just like, they're fantastic. It's like you're a visionary. You can see things and you can put combinations together to get you out of the market, get you long. One of my favorite things recently has been finding biotech stocks that were on phase 3 and coming up to a decision on whether they were going to get passed and be able to sell their drug or not. And these things, the volatility would just blow up on these things. I'm going, oh yeah, this is cool. This is cool. Did I buy the call? No, I sold the put because I wanted to own the stock. So I would get paid a premium to sell the put. I would own the shares, and there I was, happy.
Yeah. And you can trade on not only the direction up or down, but on the direction of volatility, or where do you think a market's not going? It doesn't have to be a one-way bet.
Exactly right. I mean, you can do all kinds of things. Another favorite thing used to be a back spread. You can't find them so much anymore. That's where you sell the higher strike and you buy a multiple, 3 or more of the $5 below the strike. So as the puts, that's a put trade, or call trade would be the other way. A 30, you'd be short the 30 and long the 35. 3 of those. So as you go past 35, 36, 37, oh my God, at 38, you're $900 in the money. Holy crow. And your risk on that trade was $500 because it was a spread. Max, $500.
And you can make it as precise as you want.
Yeah,
Where do you think it's going to happen?
Your imagination is the only thing that slows you down.
All right. Jeanette, it's been great catching up with you.
Nice talking to you.
This has been Dan Collins live from Traders Expo, New York.